After a surprise rate hike in May in an off-cycle meeting, the Reserve Bank of India's Monetary Policy Committee on Wednesday unanimously voted to increase the benchmark policy rate by 50 basis points. Thus, the repo rate now stands at 4.90%. Consequently, the standing deposit facility rate stands adjusted to 4.65%. The marginal standing facility rate and the bank rate stand adjusted to 5.15%. The Monetary Policy Committee voted unanimously to remain focused on the withdrawal of accommodation in order to ensure inflation remains within range going forward while supporting growth. The real GDP growth forecast for FY23 has been retained at 7.2%. GDP growth in Q1 is seen at 16.2%, in Q2 at 6.2%, in Q3 at 4.1%, and Q4 at 4.0%. Meanwhile, the inflation projection for the year has been increased to 6.7%. Inflation in Q1 is seen at 7.5%, in Q2 at 7.4%, in Q3 at 6.2%, and Q4 at 5.8%. Furthermore, the MPC noted that inflation is likely to remain above the upper tolerance band of 6% through the first 3 quarters of FY23. So, what are its implications for depositors? Usually, the increase in bank deposit rates is not in sync with the repo rate hike by the RBI. Banks hike their deposit rates by a lesser amount. For example, banks had hiked rates by 20 to 30 basis points on an average after the 40 basis point hike in May. And more rate hikes are expected in the near future, with inflation continuing to remain high. BankBazaar.com CEO Adil Shetty told Business Standard that investors who have a lump sum amount should deposit it in a fixed deposit of 3 to 6 months. He said once these deposits mature, they could consider locking into FDs of longer tenure, depending on where deposit rates are at that point.
Experts are of the view that locking into a fixed deposit of a longer tenure would be a mistake at this juncture. Wait for 6 months. If at that point of time you feel that interest rates on fixed deposits have peaked out, then you may invest for a longer tenure of 1 or 2 years. Investors with a larger amount to invest should try and ladder their investments. What does laddering mean? Suppose that you have 3 lakhs to invest. Then the first lakh should be invested in an FD with a tenure of 3 months. Another 1 lakh should be invested in an FD with a tenure of 4 or 5 months. And the third tranche of 1 lakh should be invested for 6 months. Now, why do we do that? It is impossible to guess whether the peak FD rate has been reached. Instead, if you have money coming back to you at regular intervals, you will be able to stagger out your investments and you will be able to average out the returns on the higher side.
There are other options too.
Capital markets currently are pricing in steep rate hikes, which basically means as inflation is going up, market is already pricing a terminal repo rate of 6.5 to 7%, which basically means that over a period of time, even if repo rate as and when reaches 6.5, the current interest rate structure in the market is already pricing that. Now, if you have to look at how this poses is in terms of products and different options available for investments, for example, if we have to compare it to fixed deposits, so let's say 1 year fixed deposit currently would be around 5.5 for good banks. At the same point in time, if you see the capital markets, let's say debt funds, a 1 year T-bill would be at around 6%, 2 year GSEC would be around 6 quarter, 6.5, 3 year would be 6.5, 6.75. So over here, debt funds or capital markets currently are giving you earnings or accruals, which is already discounting the future risk of inflation and hence much higher accruals and earnings as compared to a bank fixed deposits. Also suited to this cycle is something like a floating rate fund category, wherein the interest rates or the earnings of the scheme move with the interest rates in the economy. So if we expect interest rates or repo rate to go up, the earnings of that fund category also go up. So debt markets, debt funds currently are giving you a number of options, good pricing, good point to enter, much contained risk, we might have to live with near-term volatility, which is okay for investor who is seeking stable returns and investing for a longer period of time.
And how should borrowers position themselves? Most longer tenure loans, such as home loans, are floating rate loans. At present, only a small percentage of home loan borrowers are on fixed rate loans. Even there, the rates would be fixed for a limited tenure of 2 to 3 years, after which they are liable to be reset. Compared to floating rate customers opting for fixed rate loans would be paying around 2 to 3 percentage point higher rate. Meanwhile, shorter tenure loans such as personal loans and auto loans are likely to be at a fixed rate.
We spoke to Arvind A. Rao, a certified financial planner and founder of Arvind Rao and Associates, and he told us that borrowers who are beginning to feel the pinch of higher EMIs should look to prepay their loans. If your salary has gone up in the last couple of years, then you should even look to increase the EMI that you pay. That will ensure that your loan tenure remains constant even in a rising interest rate scenario. Adil Shetty, CEO of bankbazaar.com, suggests that all borrowers should look to prepay at the rate of 5% of the principal outstanding for that year. He says this is an optimal rate of prepayment. And why does he call it optimal? Because everyone can manage a 5% prepayment. Also, keep a close eye on your credit score in this rising interest rate scenario. Reason being that if since the time when you took your home loan, your credit score has deteriorated, then your lender reserves the right to hike the interest rate on your home loan.
Clearly, inflation remains the wild card. It will be closely tracked by the RBI as well as individuals, given its impact on everything from household finances to loan burdens and investment strategies. From a macro perspective, it remains to be seen how the RBI's actions rein in inflation, given that a good part of it is imported.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.